Good morning and welcome to our webinar on business owner insurance. A special welcome and thank you to our presenter today, John Jeffries from Ulster Insurance Services. I'm your moderator, Renee Goodnow from the New York Small Business Development Center. A quick note about the New York SBDC. We are a network of 22 campus-based centers and satellite offices across New York State. We provide free business advising and free and low-cost business training, in person and online. Our services are made possible by the U.S. Small Business Administration, the State of New York, and our host campuses. If you have any questions during the webinar, please don't hesitate to type them in your chat box. And with that, I will turn controls over to you, John.
So what's the purpose of the webinar? The goal is to help you become a more educated buyer. The point is also to help you create a balance between coverage and cost. Everybody knows there's going to be a cost, but you want to make sure that you're getting the proper coverage for the amount that you're paying out. And also to give you some insight so that you can make changes ahead of time before applying to an insurance company, kind of getting your ducks in a row. My background is that I've been in the insurance industry for 11 years. I've worn many hats while being in the insurance industry. I've done life, health, business, home, auto, and that's kind of given me a perspective of many different audiences and the ability to serve different groups. And this is geared up towards people who are on the beginning stages of their business career, and they have not, I would imagine most people on this have not purchased business insurance before. So that's the perspective of where I'm coming from. I'm an employee of Ulster Insurance Services, which is a wholly owned subsidiary of Ulster Savings Bank. Ulster Insurance Services is an insurance broker. We are not an insurance company. So if somebody goes through an insurance broker, that's not the insurance company. What they're doing is they're aligning you with an insurance company, and that is a subtlety that I see is often missed. Now, we also represent many different insurance companies, so that also shifts kind of the mentality and where I come from on this, because I'm a person who represents many companies, not a single company. So if you are working with an agent or a broker who has a single company that they're working with, their perspective may be different. And I say different, not better, not worse. So just so you know where I'm coming from and the perspective that I'm using, all of this is based on my personal experience. I've always worked for a brokerage. So just there may be biases there. And if you have any questions on that, obviously feel free to ask, and I'd be happy to go into more depth on it. So what is insurance? Insurance is the transfer of risk from one party to another. And I think this is where many people pop back in. Basically, we're told don't put all your eggs in one basket, diversify your portfolio, risk management. But when it comes to a business, I think most people find that all of their eggs are in one basket. You may find that a business, that all of their business concerns are all in one building. So how are you going to spread it out? There's no effective way of doing it. You can't split the building in half. You can put procedures in place. You can put sprinklers in. You can put make sure you're near a firehouse. Make sure it's a masonry environment. But the reality is all that risk is still in one place. Insurance is a way of hiring somebody else to take a part of that risk, and you pay them to do that. That's essentially what insurance is spreading that risk out. And it goes back as far as when they were sending out ships to get spices from India. They found that people were putting all of their assets into those ships. They sank. The people were destitute. And that's where Lloyd's of London, what I believe was declared to be the first insurance company, started spreading that risk out so that if a ship were to go down, not people wouldn't lose all of their assets in one venture. And that's what insurance is. It's just spreading that risk out to other people. And there's many different companies out there now doing it. And what's a BOP? Within the insurance industry, a BOP is a business owner's policy. It's primarily aimed at small businesses. They're self-contained, what would be called mom and pops, office exposures, small shops, like a small pet store or a salon or things of that nature. It protects a business if you're sued, if you have a covered loss of property, or business interruption. Those are the main three things that it's covering. So liability coverage. Liability coverage is covering you if you happen to be sued. If you're sued and you're found liable, you're covered up to the liability limit in your policy. And this is where it's important to make sure that you're properly covered, because you don't want to find out that you undercut this coverage and that you get sued and it's not fully covered. So one of the things that we recommend, and I think most companies out there would recommend, is that you go with at least 1 million in liability coverage, just because we're in a litigious society, and there's a lot of people out there that when they think suit, they automatically think $1 million. And I would maximize that as much as you can get, where it's reasonable in cost. Obviously, you can't buy so much insurance that you're not making a profit, but you want to cover yourself so that you don't lose all that profit in one mistake. One of the most important things in an insurance policy, I think, is the insurance company hires the lawyers if you're sued. We all have heard of frivolous lawsuits. We've heard of people slipping and falling on purpose and then suing the business. I don't know if there's any way to really completely defend yourself against this. People who are out there committing fraud are going to continue to commit fraud. But the way you protect yourself against it is that the insurance policy has a duty to defend clause in it. So if you're sued, even if it's not legitimate, even if it's frivolous, even if there's no merit, the insurance company still has to pay for the lawyers. You don't have to go out and hire someone. You don't have to put a retainer in. You don't have to pay for their hourly fee to defend you. All of which they'll do. You can do this on your own, but the cost there can become enormous pretty quickly. I think that's among the most important things that is out there in liability coverage. So, and this is also, you will see on your deck pages, your declaration page, you will see on your policy that this is one of those things that has a slash. So often you'll see 1 million, 2 million. And that's where it's kind of the starting point. The 1 million is for any one loss, any one lawsuit, and the 2 million is your aggregate. So that's your total throughout the year that you add up to. So you can have several suits as long as they don't exceed that 2 million, and no one of them exceeds 1 million, you have the coverage. But that can be upgraded beyond that, and you can even get an umbrella to go above that. And you just have to kind of get a feel for your business. Well, if you're a pet shop, the chances of somebody coming after you for $10 million in lawsuit is not as likely as a person who's doing something that's a much higher risk. Property coverage. This one is pretty straightforward. It protects your property, it protects the building. If there's a fire, there's lightning, there's something falls on the building. If there's some way, shape, or form that the building can get damaged, this is where the coverage comes in. And you want to make sure that you have enough, that it's going to fully cover the building if you own the building. If you have to cover the building, you don't want to cover it if you don't have to. That's just wasted money. The second is business personal property. This is the equipment in the building. Basically, the way I've heard it described is if you turn the building upside down and shake it out, whatever falls, that's your business personal property. Some businesses, business personal property will far exceed the cost of the building itself. And this is an area where it's your business. You want to draw this line. You want to kind of have an idea going in what these things are going to cost. What do you need to cover in order to keep your business in place? It's just something, again, keep your ducks in a row, make sure that you have this information ahead of time. And if you're working with someone, an insurance broker or an agent, they may be able to walk you through some of this from a strategic standpoint, but you want to kind of have an idea ahead of time too. Business interruption coverage. If you have damage to the building and the insurance company says, yep, it's covered, and now it's going to take 6 months to recover the building. What do you do to make money in the meantime? You're still going to have bills. What if you have a commercial loan? Who's going to make the payments on that? Who's going to continue to pay for all the things that are still expenses? Who's going to pay the payroll when you're unable to make money? That's where business interruption coverage comes in. And that's part of a BOP. That's one of the main features of a BOP, is that it does come in and help pay for the time in between when you're able to actually when you're able to actually make money again. It does come in, and it's just, I could see an easy situation where somebody is unable to make money and goes out of business even though it was a covered expense. And that's something that nobody really wants to see. Business, you've worked to build it. You want it to be able to persist even through a really rough time.
John, we had a quick
All right.
question for you.
Okay.
Apologize for interrupting. For the
No problem.
business interruption coverage, how do you determine how much that is? Is that something you work with your broker on, or is it a month of, how do you go about that calculation?
Usually, I believe the rule of thumb is a year, and it's usually a deductible of 24 hours. You have to, ahead of time, one of the things that's used in underwriting is gross sales. So it's going to be based on what you proclaim at the beginning of the writing of the policy.
Great, thank you.
Okay, so the dues. Be honest. Don't uh, don't try to pull it over on the insurance company. It will come back to bite you. They do their underwriting. The people that do it, that's all they do is look at these things day in, day out. Whatever trick that somebody thinks they can come up with, the insurance companies are already on top of it. Uh, and also, if they catch one thing that looks dishonest, they're going to examine everything else with a fine-tooth comb. So just be honest. Plan your numbers ahead of time, like gross sales, like the area of the building, or how many people you expect to come through the building. Those are things that are going to be used to develop the rate. So the more of that you have ahead of time, just the smoother the process is going to go. Have accurate details on the building, the lease, and the property. So is your building made of brick or is it made of wood? Is it 100 years old or was it built last year? All of these things go into the rate. And it's very easy to not know these things. It's very common to not know these things ahead of time. This is something that could easily make the process a lot simpler. And then also know your lease. We've seen people that we go through, we do an entire quotes and then find out that there's something in the lease and we need to reassess everything at the last second. So that's something that the insurance professionals you're dealing with, they can't know your lease unless you give them the details. So what we want to do is provide them with as many details as possible so that they can serve you best. And then property details. If you know that there's a suspect sidewalk out front, the insurance company is going to notice it. So we want to address that as early as possible. And make sure you have enough time to shop. You want to get as far ahead of it as possible. They say 90 days you want to start thinking about the insurance, and then you want to give about 30 days. You don't want the insurance professional you're working with to be limited who they can go to because they know who's fastest. Because some companies are faster than others, but that isn't the only judgment that you should use with them. Some companies may be slower but are a better rate and possibly have a more robust coverage package. So you want to give them just enough time to go through and make sure that first you're getting, like I said, that balance between coverage and cost. Find someone you can trust and communicate with well. You want to be able to talk to the people that you're dealing with. You want to have that level of trust that they are doing a good job for you, and that they do have a level of professionalism, that they do have a connection with the insurance companies that they're dealing with. So you want to make sure that you feel comfortable to have a real conversation with the people you're dealing with. I think this is among the most vital things possible. If you don't feel that level of comfort, something might not get said. If it doesn't get said, you may not have the proper coverage. Another do is maximize your coverage. I've seen people who are on the low end risk-wise who fall below company minimums. When you fall below company minimums, that's the time to kind of maximize all the coverages, so you get the most of what you're paying for. I've seen people that only have $500,000 in liability coverage, but were able to get up to $2 million with no additional cost. I've seen people that didn't have any property coverage because they were trying to make sure they didn't pay too much, but because they were below company minimums, they were able to get property coverage at no additional cost. So make sure strategy-wise, if you're on that low-end risk-wise, that you are maximizing everything you can, because companies do have minimums in terms of their overall premiums. Every time they take a premium, there's a cost to the insurance company. They understand that, so they do have a minimum. So your coverage will never cost nothing, and usually the minimum is around $500 if you're in a very, very low risk situation like a photographer or a graphic artist, or all you do is web design and nobody's coming onto your facilities. They tend to be on the low risk side, but they are the ones who can really maximize their coverages underneath that minimum. So make sure you're getting everything you're paying for. And this is one that I think people overlook completely. Pay attention to your websites. Pay attention to Facebook, Street View. and advertisements. Street view is one that I think people don't think of at all. But now you can go on Google. You can go down Main Street and you can see the front of your building. Make sure that if you know that's a really bad photo, that we're ahead of the game and that we have some prepared pictures to send over to underwriting to make sure that we're shopping effectively. Make sure your website doesn't have things that are extreme. Like if you're a lawn care, don't have a picture on the website of somebody dangling from a tree cutting with a chainsaw. We don't want to have this framed in a way that skews the underwriters towards thinking that you're doing more dangerous things than you are. If you're a tree cutter and you're hanging off a tree cutting, that's what you do. That's completely accurate. That's not a problem at all, because then we're telling the correct story. And then Facebook. All underwriters, the first thing we do when we make a submission, they're going to Facebook and looking at what are you advertising, what are you saying you can do, and then obviously your advertisements. If you're advertising 10,000 different things, the underwriter is going to want to underwrite for all those 10,000 different things. That may hurt your ability to get a proper rate. When we're going to an underwriter, what we want to do is make sure they have an accurate view of what you do. If there's something extreme on your website that's outside of your normal operations, what we're doing is we're anchoring their opinion of what you're doing to the wrong things. They start having an idea that may not that may not be what your true core business is. So we just want to make sure that we're addressing those things. When we go to an underwriter, we hand over the submission to them or the risk to them. We want to have it be accurate. I think that's among the most important things. We're not misleading, but we want accuracy. So, and that's just one of the things that I find is it's been catching people pretty frequently is that their websites aren't indicative of what they do on a daily basis. Don't over embellish what you do. We want to tell the true story of what you do, but we don't want to give too much information. If we're thinking about in 5 years expanding into a higher risk area, we don't want to talk about that initially. Every insurance contract is a year contract. If you think it might happen during the year, we might need to address that. If you're not doing it yet, don't address it yet. It's something you do want to back off on and put aside. If it does come up mid-year, now we need to address it mid-year. We need to go through, talk to the underwriter, see if we need to endorse the policy or make a change to the policy, or if we need to change the policy altogether and go a different direction. But that's mid-year. You don't want to pay more all year long because we proclaimed that something was going to be more expensive or more higher risk and have to pay the entire year just in case more business came in. I find this often happens with contractors. They will say, sure, I'll do that, sure, I'll do that, sure, I'll do that. And what they're doing is they're triggering the underwriter into saying higher risk, higher risk, higher risk. If you're just a drywaller, that's what we're going to say. Now, if you think you're going to expand into electrical work, that's fine. But let's not cross that bridge until we get to it. And then also, don't just sign up with Uncle Bob out of family loyalty. Just because you have a nephew who got in the industry 2 weeks ago, or somebody who's been in the industry for 10 years, but all they've done is homeowners policies, they may not be the best source. This is your business. This is paying the bills. This is what puts food on the family table. This is what pays for the vacation that Bob might want to go on as well. We want to make sure that you're dealing with an educated professional, and if that is Bob, awesome, because that communication level is going to be there. That's actually a good thing. But make sure it's not just out of family loyalty. You want to make sure you have somebody who's educated, who's a professional in the area. So I'm certainly not talking against Uncle Bob. If you happen to have Uncle Bob who's an expert in the area and is the best in his field and in his area, that would be great. It's awesome to have somebody that you can communicate well with, but make sure it's not just because of family loyalty. Losing the business because of choices made by somebody who's not experienced is just too important in my mind. And obviously, that's something that you have to make as a decision on your own. So tips. Read your lease. Go through. We've gone through entire policies, given a quote, and found on the day when it was closing, the business was transferring hands, that the way that the lease, that the building that they were going into said that they had to cover the building. They didn't know that. Our quote did not reflect that. So on closing day, we're now telling them that they have a huge increase in the amount that we quoted because we just weren't aware. So just make sure you read the lease. Make sure that you're aware of what is necessary. Often leases will have insurance requirements. They'll often require 1 million, 2 million coverage, and again, that's that 1 million for one instance or 2 million for the year in terms of total coverage. Don't skip hired and non-owned. This is an area that's very easy to skip. Hired and non-owned is not commercial auto insurance. It is, I send my worker out to grab coffee for everyone, and they get into an accident. They file a police report because they're in an accident, and they say, "I was just grabbing coffee for the office." If lawyers get involved, they know that they can sue the business for this. You want to make sure that this is something that you have. It's generally considered an expensive coverage, but it's an area where it could end up making a huge difference to the company. If you send somebody out to pick up a ream of paper, you want to make sure that you do have coverage for those incidentals. If you have to rent a car for some reason for the business, this is something that will be covered there. But also employee cars that they're doing company business, and even as simple as going and getting a coffee. This is an area where you can cover for relatively low cost. Everybody knows that you can raise your deductible to lower the premium. You want to make this approach this in an intelligent way. So each year you might want to add a little more to savings to build that deductible up to lower your overall cost. This does not apply to a person who's near the minimum. For instance, I've seen people drop their deductible down to $250 without increasing because they're below that minimum cost again. So if you're in a low-risk business, raising your deductible may be a bad strategy. Get the most for your money. That's kind of the theme, always get the most for your money when it comes to insurance. Add the enhancements and endorsements to your policy if you have the ability to do so. Not every business has it, but these are things where you add in some like debris removal, employee dishonesty, backup sewer drains. These things come in packages. They make the coverage more robust. These packages are sometimes only $150, $200, and it can add a lot to your business. And a lot of things will never come up, but if they do, it becomes incredibly valuable. And that's kind of how insurance works. You hope you never need to use it, but if you do, that's when it becomes incredibly valuable. Also, check your industry associations. Some industry associations have amazing insurance policies, but I do caution you not to get too loyal to them. Sometimes they become too expensive. Sometimes there is better. There is better coverage out there and more robust coverage available. So check the the industry associations you have. You may be able to find coverage there that is custom cut to your needs and is less expensive. It happens, and that would be great. But if it's not better, don't go with it. Don't be overly loyal to it. If there's something out there that's better, again, maximize your dollars for coverage. It's the overall theme that I try to harp on a little bit. So what's not covered under a BOP? Commercial auto. If you have a fleet of cars that are out making deliveries, that's a commercial auto policy. It is not covered under a BOP. That is not what hired and non-owned is. So if you're in a delivery situation, if you're a restaurant, you're running deliveries, that's not something that's going to be covered under your BOP. If you're on the road and you have commercial vehicles with your sign on the side, it is not covered under a BOP. That is a separate policy. We'll go over more of that next week when we do the commercial package policies. Professional liability is not covered under a BOP normally. It's something that can be added back in depending on the business. Professional liability is like malpractice. So if you make professional recommendations and they don't go well and somebody sues you for it, that's something that's considered professional liability. In the medical industry, we call it malpractice. In the insurance industry, we call it errors and omissions. If you make a professional opinion or you make recommendations and they feel that in doing so you harmed them, they can sue you for it. This is what professional liability is. Some industries, it can be bought back under a BOP. There's some riders that can be added on to do that, but that's not 100%. Depends on the industry you're in. Workers' compensation is not covered under a BOP. It is a completely separate policy. That's if the people working for you get hurt. That covers them for their medical expenses. And we'll go over a little bit of that next week as well. That is an area where you may be required to have that. That may be a legal requirement. Workers' compensation and disability, they're not covered under a BOP plan. A BOP is much simpler than that. Flood is not covered under BOPs. it is specifically excluded under everything, pretty much, unless it's a flood policy. If you're in a situation where a flood could come through or is even slightly likely, flood can be incredibly valuable to a person who needs it. In our local area, we're in the Kingston area in the Hudson Valley. We had a couple mountain towns where they were just wiped out. Like entire main streets were, 3-4 feet of water. I think the same thing has happened up in the Mohawk Valley. We're in New York State. New York State has floods, and they can be pretty catastrophic. If it's your business, it's not a bad idea to get that, but it is not covered under this policy. Also be aware of anything that's excluded. There are going to be exclusions in your policy. You want to read through and make sure that nothing is excluded that you need to have. Some of the common exclusions that are out there are like war. If you have a loss due to war, it's not going to be covered. The insurance companies, I believe since day one, have actually excluded war just because if it occurs, it's so catastrophic that the insurance companies would go out of business if they covered it. Nuclear hazard is another one that's on every policy as an exclusion. Earthquakes is one that's on the majority of policies as an exclusion. In New York, I don't know if there's been a lot of losses in regards to earthquakes, but I would say most policies don't cover it. That's something that generally you can buy back. You can go in and get an endorsement for it. I just worked on a homeowner's policy where I found a policy where it was available to them. They had asked about it, and that was the first time it had come up. I do know we have earthquakes in New York, but we don't tend to have a lot of ones that are causing property damage, unless I'm unaware. So if you're in an area where that's happened, actually shoot me an email. Actually, I'd like to hear about whether that's actually occurring or not, and whether that's a false statement. So just be aware of the exclusions.
John, we had a quick
Yes.
question before you start the next
Yes.
slide. If you're a landlord, do you want a BOP or just have the extra charge for renting to others fee?
That's something where you want to feel it out. It can be a BOP depending on how many units you're renting out. So it may fit into a BOP, but we find that falls under what's called like a landlord package policy, which are closer to a homeowner's policy in a lot of ways, or what's called a dwelling fire. So they're structured a little differently. So maybe depending on how large the facility is. So that's one where it's kind of on the line depending on the situation.
Okay, for this example, it's 11 single-family properties.
That might be getting into a commercial package property. I would have to look at it more specifically, and different companies might treat it differently. So this is an area where we would have to look at it from each company might address it slightly differently. But 11 would definitely be in the commercial range. So whether BOP would cover it or not, I would have to look if it's all on the same property, or if it's something where it's a commercial package where we have to look at it differently. And with properties like that, if it's 11 separate properties, they all could be completely different underwriting situations. So one could be brick, one could be made with frame, so it could be made out of wood. So it's one of those ones where we'd have to kind of custom cut that. There's not really one answer I could give that would make sense without going into more details.
Great. They will follow up with you to get more details on that tomorrow.
Okay.
Great. Thank you.
Yep, no problem. All right. And who are you dealing with? And this is where I said that we're a broker. I'm part of a brokerage, so we deal with many different insurance companies. A captive agent is an agent who works with just one company, can only work with that company. They're contracted. These are very familiar names. So this is like your Allstate, State Farm, Farm Family. I believe Liberty Mutual, if you're dealing with them directly, is one of them. They can only deal with that company. When you go to them and they do the underwriting process, it's only with them. They may, in fact, be the underwriter. I'm not in that boat, so if that's inaccurate, I do apologize, but I believe they may also be the underwriter. They are beholden to that company. They are contracted. So that is something that you just want to be aware of. That is not a negative thing if they have the best coverage and the best price, and sometimes they do. So this is not a negative thing overall. Just know who you're dealing with. So State Farm has BOP programs, and they may be very, very good. Now, as a broker, because they're captive, I also won't have access to that. So that's why it's a little bit of a dark area for me because I'm not allowed to see it. They do all of their work internally. They don't deal with brokers on the outside. A broker deals with many different companies. A captive agent deals with a company, and that doesn't make it bad. It's just they don't have as many options. But what they do, they tend to do well, so that there is an advantage there, but it is different. So just know who you're dealing with. A broker is, again, it is not beholden to any one company. So they go out and they shop the market for you. And then there's websites. You can use websites. There's nothing in general wrong with websites. In fact, I'm of the opinion that almost all information is available to everybody at all times, and that's great. But it's very difficult to know what to do. We end up in what's called the paradox of choice. There's so many options that it's hard to make any decisions. A website allows you to pick up and drop coverages without necessarily knowing what you're picking up and dropping off. So just be aware of that. There's nothing necessarily wrong with a website. Many very good companies use websites, but if you were to drop off an important coverage, you wouldn't know it until you had a loss. And that's why I personally like to deal with people. I like to get on the phone with them and have a conversation with them so that I know that they understand what I'm looking for. And websites will use sliders. They will use just buttons. It's easy to drop a coverage with just a button or a slider, or some companies will come out with, on the personal line side, pick your own rate. Well, if your rate goes down, you're losing something. And I think that those things oversimplify, and you may end up hurting yourself. So just be very cautious with a website. That does not make it bad. And if they're allowed to sell in New York State, that means that they are a legitimate company and they're financially viable. There's nothing wrong with that. But just the level of responsibility falls directly on your shoulders there. There's nobody else who's able to help you through with a website, and just be very cautious with that. So that is not a good, bad thing. None of these are good, bad. It's just know who you're dealing with. So that's the conclusion of the base of the presentation. Thank you for listening. Thank you for the questions. If you have any more questions, now's a great time to ask. If there's anything else you'd like me to go into more depth on, I'd be happy to if I can. And if not, just feel free to reach out. I'd be happy to answer any questions through email, phone. I'd be happy to go through and do what I can to kind of make sure that you're making good decisions. So the next slide is my contact information. If you want to reach out, email. And also one thing that I would ask, any opinions you have on the presentation itself. If you have any feedback on improvements or areas that you think it should be focused on more, just let me know. I do enjoy getting feedback and learning. That's one of the things I do enjoy. I speak in front of groups with some frequency, but this is the first time that I've actually spoken in front of a webinar. So if you have any opinions or feedback that you think would help me in the future on that, that would be very helpful. So if you have any questions, now's a great time.
Great. Thank you, John. We do have quite a few questions rolling in. So the first question that came in is, do brokers help if a claim is needed?
Every broker is going to have a different department of how they work with that, or I shouldn't say department. They're going to have a different way of addressing that. They're going to help. They're going to advocate for you because you're their client. Every broker is going to have kind of they all operate differently. So there's no one way a brokerage has to work. They're going to advocate for you. Often, what you're going to see is that they tell you to get directly in contact with the insurance company, because the insurance company wants to deal with you directly. They want to get everything that they can get notated. The broker may give you steps to take as immediately as possible, because one of the duties under an insurance policy is that you stop the loss. So if there's a hole in the roof, you want to put a tarp over it, or some way, shape, or form, or move everything out of the way, or put a bucket out to keep the loss from getting worse. That's one of the duties you have under an insurance policy. So a broker may make recommendations like that. So they're all going to address it slightly differently, and they will help you, but you're very likely going to have to directly deal with the insurance company to an extent.
Great. Does your credit score impact your insurance rate?
It certainly affects your homeowners and auto, with no doubt whatsoever. With the business insurance side, they're using I'm drawing a blank here. Your tax ID number. I don't know why I'm drawing a blank on that. They're using your tax ID number, and I don't know if credit scores are going to be drawn from that as easily. So not nearly as much, if at all. I haven't seen that come up frequently at all. I know when we do homeowners and auto policies, we have to give out a disclaimer saying we're running credit score. That I have not seen come up on the commercial insurance situation. Depending on the size of the operation, they may ask for a copy of your finances. So they may want a financial statement. So they may be running kind of like a background credit check from that perspective to make sure that you're financially viable.
Great. And we have a couple more questions. Do you have access to coverage for home inspectors? And do you have access to coverage? Oh, same thing they wrote again. So, yes, do you have access to coverage for home inspectors?
I haven't particularly addressed that specifically, but I definitely can look it up. That's not one there's so many different industries you can't know everything. So that's one I'd have to look up. I don't know if that's something that's standard and easy and simple, or if that's something that uh, needs further underwriting or a commercial package. I'd have to look that one up because they're not working just out of a home. They're actually having to go out to a facility or a site to do the home inspection. So there's kind of a different. It may not be a BOP. That may be a commercial package.
Okay, great. I'll recommend that one for reaching out to you after for follow up. What type of insurance do you recommend for a tutoring business? All services are provided on students or public premises.
Well, you're going to want to have general liability. You're going out to okay. So I'm assuming that you're going out to a school. I would say you need a general liability. You may not need property. It really depends whether you have a computer or a set of books or software that could be lost. A lot of stuff is backed up though, so you may not need coverage on that. So I would say definitely GL. I also it's an awkward thing to refer to, but it's something it's important. You're going to want to have you're going to want to make sure you have like an abuse and molestation coverage in place. You're going to school and you're dealing with kids. You're dealing with that kind of an environment. If you get accused, you want to be able to have a defense. So that's something that we're looking at, something like a package that would be able to add that in. And then also, obviously, you want to make sure you have precautions that you're taking, never be in the room alone, things like that. So I don't know if that would be a BOP. I think that's probably going to be a package, and from a liability standpoint, pretty low. But the specific coverages like abuse and molestation might end up becoming quite pricey. I don't have that. I haven't had to run that specifically on a tutor before, though, so I wouldn't know the exact more or less of how much that would cost.
Great. We have quite a few more questions. Can you offer advice for a small service that makes house calls? The service is helping seniors for government forms.
Well, that's another one where it definitely have GL. You're going out to the property. Property depends. Do you have an office? Do you have computer equipment? Is there backup? So one thing I haven't mentioned yet that I probably should have at this point is cyber liability. If you're keeping files and somebody could get a hold of those files, if you could lose a laptop, you're going to want to have cyber liability. Um, if you're dealing with the elderly, I would say abuse and molestation might come up again. It's something. Elder abuse is a thing that does occur, and if it occurs, then people can make the accusation whether you're a person that's in that boat or not. And if you have employees, then you can only vet so much. So that's another area where it's probably mostly a GL coverage. It may not be a BOP because you're going out so frequently. So that's something that you may want to address from a general liability standpoint, and then also make sure that you have all the other coverages that may come up. And another one that if you're going to people's homes, I would say make sure that you have some specific criteria in mind as to how people are supposed to act.
Great. Can you save money if you lump your personal home auto with a BOP from just one company?
Not impossible, but I haven't heard of any particular programs. It sounds like if you can, that may be something that the captive carriers can do. Because I'd be blind to it because I'm not a captive carrier. Um, so somebody like a State Farm might do something like that. Depending on the business, some homeowners policies will have a rider for a home business. A couple of companies that come to mind might be able, depending on the business, if you're making your own fireworks, it's not going to work out that way. You're going to need to have a separate policy. But depending on the business, it's possible to combine them all into a homeowner's policy.
Okay. Would you have an estimate on how much a 1 million coverage policy would cost?
No, it's a complete variable. The gentleman I was referring to before, where we expanded his coverage to 2 million, 4 million from 500,000 without really raising his rates. Um, he's a graphic designer. Nobody ever comes over his house. He works alone. So it's incredibly low cost for $500 a year. He's getting $2 million in coverage. But if a person who's a general contractor wants 1 million in coverage, he could find, if he's doing $100,000 in sales, that could be a $7,000 policy. And I'm just throwing numbers out there. They don't attach these to any meaning, but it could be a huge variable for that $1 million. So no, there's no way of knowing without knowing the business.
Absolutely, that makes sense. Do you have any experience with home-based daycare insurance? It's a family daycare, and what is the most important thing to look at when buying that type of insurance?
GL property, because now you have to have the stuff. You have to have, bookcases and little chairs and all that sort of thing. So now we do need the property coverage. So the people going out, I assume that they're traveling light, so there may not be a lot of property. But if they're coming to you, now you have to have the facilities. Um, Likely you're going to have employees. So now you're looking at it's possible you could do it under a BOP, but you're definitely going to have the abuse and molestation again. You're going to want to have cyber if you're keeping any files on hand for the kids, and if you're in any situation where you're dealing with the school districts, like you're in and I've forgotten the term for it, but locally here in the Kingston area, a lot of the daycares work with the school districts, and they get part of their funding. So basically, the preschool is also, it's kind of a daycare they mix together. It's possibly Head Start, maybe the proper word for it. And if you're doing that, then you might have a higher threshold for what you need to have in terms of coverages. They may put a threshold in there, but I would maximize. In the insurance industry, children are considered what's called a indefensible. Indefensible. If the kid is hurt, you're 100% at fault automatically, and insurance companies are aware of that. They If the kid gets hurt, it's 100% the adult's responsibility. You should have prevented it, and we all know the kids are going to get hurt. They're going to walk into the wall. They're going to run into the chair. So you just want to be hyper aware of the fact that the insurance needs to be in place for the bigger things. So you definitely want to have coverage in place. I would imagine a BOP could cover it, but you're going to want to have the workers' comp for the employees. You're going to want to have abuse and molestation in place because, again, an accusation could sink the business. Cyber, if you are going to be sharing any files with outside sources.
Great. When you mention employee-related coverage, is there a difference between 1099 and W-2 workers?
Huge difference. If they're W-2, you're going to need workers' comp. 1099, you may need workers' comp. If they're truly a 1099 and they truly are a contractor, and you got to look at the governmental definition of it, of a 1099. If they're a 1099, you don't need workers' comp from a legal standpoint, but you may want to have it anyways, because if they get hurt and they don't have workers' comp for health insurance and they start looking for somebody to help pay for bills under New York state law, it may still come back to you. So you do want to be very wary of that on a 1099. And if they're 1099, you may want to have them prove that they have workers' comp. We find this with contractors often because workers' comp is not cheap, especially in the contracting business. Somebody working in an office is less likely to get hurt than somebody who's swinging a hammer. Um, you know, and that's an area where we find that the rates go way up pretty quickly. So yeah, a W-2, they're an employee. You need workers' comp. You need to have disability insurance in place by law. 1099, it may be a really good idea to have that in place. We have seen major companies get hit with this. I think it was several years ago now, but Walmart, I can't remember the numbers, but I think we're talking like $30 million that they had to go and pay for a backlog of workers' comp because the people that were cleaning were considered 1099. And then the Labor Department said, no, they're employees. And then they had to go back and pay for all the workers' comp because of the definition of an employee. So be very careful with your definition and the role that you expect your 1099s to play. If you're managing their work on a daily basis, they're probably employees. So just be very wary of that. And there are a lot of sources on that, and I'm not a lawyer, but just be very wary of it. And if you're doing a lot with 1099s, you may want to speak to a lawyer to make sure that you're dealing with them in a way that doesn't come back to bite you down the road.
Great. Do you have a list of top-rated BOP insurance companies?
No, I don't. AM Best is going to have a list of them. I would look for A-rated or better. There's a lot. There's a lot of companies out there that are competing in this industry, and a lot of them are very, very good. So, and I don't want to get into starting to list the ones that just I deal with. And we only deal with A-rated. And you want to work with an admitted company when you can. And most BOPs are admitted. You're going to find almost everything that's BOP related is admitted, so that means that they're licensed to do business in New York State. They meet New York State rules. Some of the outliers, like somebody who's making manufacturing fireworks, or somebody's doing, let's say they're working on high tension power lines. An insurance carrier who's admitted in New York State may not be able to do those kind of risks. You may have to go outside New York State, and then you may find that the ratings start to fall in terms of what's available to you. But yeah, stick admitted, and I would say stick for A-rated. And there's a lot of variety out there. There's a lot of competition. And when you can, I would go that route, is to just AM Best and just check. But I would say find a point person who's able to advise you in the right direction. Once you get that, once you get a person that can kind of push you in the right direction, if they're making recommendations, check the recommendations. Make sure that they're legit companies that hold up well. And the internet provides a lot of these things. And AM Best has kind of been around forever doing these sort of things and finding their financial viability. One area where I would loosen the restriction on what the AM Best rating is on health insurers. The health insurers always seem to have low ratings. So you may find a very good health insurer only having a B or a C rating. So that's one area where I found that AM Best, I think, is prudently rating, but it looks worse than it is.
Great. We have another credit score related question. Does your credit score impact you to buy a bond for your business?
I haven't dealt with bonds. I don't know. I would imagine it does, but I don't know that offhand. So that's what I can get back to you on. I just don't know that. I personally have not worked in that particular field.
Great. Thank you. What type of insurance do I need for an employment agency?
Well, you're going to need the office coverage. So you're going to get a BOP for the office. And then if it's an employment agency, you're going to need to get workers' comp because I'm guessing it's a shared employment situation. And you're going to need your workers' comp and your DBL, your disability. And then you're going to want to have your employee practices coverage, which everybody should have, but in your case, it would be a focus because the onboarding and offboarding of people is going to be far more frequent, so mistakes are going to be more likely to happen. And that's an area where I would definitely protect myself, is in that area because people don't always leave on happy terms. So just, and if you're an employment agency, I would imagine there's some of that if you're in a shared employee situation. But yeah, workers' comp, general liability, but I could see the people that are working for you in your office staff, a BOP would cover the vast majority of your risks. But I would definitely get additional policies for the risks specific to that industry.
Great, thank you. What are the typical insurance limitations for working in multiple states?
I'm sorry, I missed the end of that question.
Nope, I apologize. What are the typical insurance limitations for working in multiple states?
As long as it's underwritten properly, you shouldn't be limited. As long as that's why you want to be upfront and have a good level of communication with the insurance professional. You want to be able to go through and make sure you tell them that initially, so you don't have any exclusions you're not aware of. Um, I'm trying to think of any in particular, and I can't think of any that I've run into, but I haven't dealt with a lot of multi-state risks. So if that's something that you're concerned with, then I would definitely just address it with the insurance professional to make sure that it's not something that's excluded and that there's no loopholes. And they'll likely just call up the underwriter and have a conversation with them. A lot of this stuff is just communication.
Great, and we have a few more rolling in. Is there a package of insurance that would cover the basic needs for real estate investors? I assume the needs would change as a project is renovated and is completed and switches to a rental property that's held.
Yeah, yeah, that's where the landlord policy pops in. Depending on how large, again, it might be a commercial policy. They do cover buildings under renovation differently than they do a fully renovated building. So that would be what is called a builder's risk, and that it's more likely materials get stolen from a building under construction. So builder's risk covers those type of things because that's where the higher risk is in theft or vandalism because there's nobody living there. So yeah, there's a way of kind of custom cutting for that specific need.
Great. Can you review the difference between business auto and commercial auto coverage?
Well, business and commercial auto are kind of synonymous. Hired and non-owned is a rider on the BOP. That's for the occasional, I'm running out for coffee, I sent somebody to go pick up paper. Can you deliver these papers to our client? Just run them out. It's a one-off random thing. It covers you for incidental usage of an employee's car or a vehicle that you had to go rent for a particular purpose. Going out to a trade show, you never do that, but you have to rent a van to get everything to the trade show. That's where hired and non-owned comes in. Commercial auto is I'm running, let's say, like a propane company, and I have trucks on the road all the time. It's its own risk group. It's not occasional. It is your business plan. It's how you operate. So one's incidental, but if something were to happen, high risk. And the other is, and if you slap your name on the side of a vehicle, it's a commercial vehicle in terms of your liability. So just be very careful about that. It's an area where I don't think most people understand that they're taking that risk on. That if you put the picture on the vehicle and you're just driving around at night, they could come after the business because they're going to immediately associate that vehicle with the business.
Thank you. What type of insurance needs would I need to keep in mind for wedding and event planning businesses?
I would go with first thing that goes to my mind is professional liability. You're basically being asked to make 100,000 recommendations. So what's going through my head is professional liability. That's what kind of caught me off guard there for a second. But you're going to want to have general liability. If you're supplying any of the chairs, tents, I'm trying to think, the trellis, anything like that, you're going to want to have property coverage there. If you're just meeting with people and then coordinating that with others, then property may not be an issue. Property coverage is totally fine to have, but you don't want to pay for property if it's not necessary. If you have a $500 laptop and that's all your property, why pay extra on a policy for it? If you can get it for free, then get it covered. But if it's going to fall below the deductible, then it may not be necessary. But if you have infrastructure that you're bringing with you to an event, then you want to have that covered. The but the professional is where I would jump to almost immediately. If you own the venue, then you want to have liquor liability. If you're owning the venue and people are going to be drinking, you want to make sure you have some kind of liquor liability in place, even if it's just a day policy. And I would probably develop a relationship in your contract that they're going to actually acquire wedding coverage, which is not an expensive coverage. But if they get wedding coverage, then if something happens, they go to their insurance company instead of going to a lawyer and then they come after you. It's just one more thing. I would kind of work that into my business plan right off the bat if I was in event coordinating or in wedding coordinating.
Great. Thank you, John. Well, we are at an hour. So I don't know if you want to field one more question, and then if there's any other follow-up ones, I can email them to you. Would that work for you?
Sure.
Okay, great. The last one for today. Do you need a liquor liability for an Airbnb house rental?
The response to that would be, are you providing alcohol? If you're providing alcohol, I would say it starts to become a very valid concern to have liquor liability. If you're selling alcohol, certainly. And then you have the legal, I'm not sure when you need to get a liquor license. But if it happens to be there, it's an area that I have not heard anybody address yet, but I could see that being something that's prudent. I believe it was in New York State, we heard about somebody who did the Airbnb. They did it in their parents' name and then showed up with like 20 teenagers and they were all drinking. And nobody was quite sure who to sue when somebody got hurt. So, yeah, the Airbnbs are kind of a cloudy area still. So I would be I would make sure you read through the policy very specifically because Airbnb as a business is still very cloudy. Companies are still trying to get their hands around it. It's not something that has been around long. So when you're running a dentist office, the insurance companies are pretty certain what the risks are. They got this stuff down. They've been doing it for 90 years. Airbnb is still emerging. Same thing with the car rentals, the Uber and Lyft and things like that. They're still trying to get their hands around it in a way that serves people, and also that they're not going to open themselves up to massive costs that they didn't anticipate. So I have not heard that one yet. I would say it's probably not a bad idea, but I'm not sure who would actually sell it either because it's kind of a mix between private and commercial.
Absolutely. And in this situation, it's guests bringing their own. It's not being provided.
Then I don't think any of it's on the person. But again, I'm not a lawyer, so that might be something that you want to talk to uh, with a lawyer because there was that situation where it was teens, and I think everybody got sued because somebody got hurt or somebody left and got into a car accident after it was like 20 teens in a house that was Airbnb, and basically it came back that the people renting the house should have known better, and then the parents should have known better, and basically people got hurt and everybody was looking for somebody to blame, and then there wasn't really a good answer to that. I didn't hear the conclusion either. It may still be going on. And I can't remember where it was, but I believe it was in central New York that had occurred. And I think everybody was kind of looking for the answer on that, but I have a feeling it's in the courts.
Great. Thank you again, John, and thank you to all those who attended and for the great questions. If you have any follow-up questions on the presentation for John, his contact information is on the screen. And if you have any questions for the New York SBDC on our business advising or trainings, definitely check out our website at nysbdc.org, or you can follow us on social to get more frequent updates.